We are the only industry on the planet where we have got twice as bad as we were 20 years ago, despite the billions of dollars spent on technology.
Okay, let's start, Anthony, with you, if you don't mind. We don't need to be reminded of how enthusiastic the enhanced underwriting report was. What I'd be keen to know is what you think is driving it. I mean, there's universal enthusiasm, but there must be some underlying market dynamics, and they basically say this is the right thing at the right time.
I think the short answer is we have a cost problem. And if you think about Marsh, for example, we put $20 billion into the market. About 75% of that comes from our network, from overseas. And our job as global brokers is to find the best solutions for our clients wherever in the world they may be. And therefore, we need London to provide the best solutions. It's very simple. When the market was hard, there was scarce capacity, and of course, it was relatively easy to justify the role of London. But London fundamentally operates at a 5 percentage point absolute cost disadvantage versus local markets. So now, of course, we're seeing, as the markets soften, more and more business is being retained locally. So we have to tackle our cost problem. And you say, well, is there really a cost problem? Well, look at the administrative cost ratio of Lloyd's over the last 20 years. Okay, 20 years ago, it was 6% of premiums, administrative cost. It is now 12.7%. Okay, we are the only industry on the planet where we have got twice as bad as we were 20 years ago, despite the billions of dollars spent on technology. Okay? That's pretty depressing for those of us in the room that have been around for 20 years trying to change the industry. But you've got to ask, why is that, right? What has happened, right? And the reason is that we still trade fundamentally the same way we did when we placed the Titanic 100 years ago. Okay? We trade through documents, specifically emails and attachments. And what that means is that every step in the process involves an individual, be it broker or underwriter, detaching the documents and stripping data from them and rekeying it into another system. Marsh alone, we do that 35 times on any particular transaction. So step number one is we have to move to a data-first trading paradigm. We have to get rid of the emails and attachments and exchange data. Data becomes the lifeblood of this industry. And if we can do that, then we can move data between systems, which obviously eliminates all that rekeying. But then the really exciting bit, which is why we're talking about enhanced underwriting, right, is what you can then do with that data by connecting up automation, because you can start to eliminate low value added activities. Okay, so for example, if I look at the follow market today, 35% of the effort of our brokers is spent chasing down follow lines. We're moving into an environment where they can bring up a trading screen, and with a single click, they can see access from our quota shares. We have 15 of them. The house one is called Fast Track. But that provides 15, 20, 30% follow capacity. And then we can hook up the digital follow market and get indications of capacity from 10, 20, 30. We see the whole market going in this direction. And therefore, on a trading screen, I now have access to all the follow capacity I need. And I combine that again with a single click. We've already done that with Fast Track. There's a rules engine behind Fast Track. It's connected to Whitespace. Single click, I bind. That 35% of effort goes to 5%, maybe zero.
Impassioned plea. Thank you. Is that what gets you excited? I mean, you too, from a carrier's perspective, you've got to reduce your costs. You've got to make the case internally. What is it internally that is driving your need to get behind things like this?
Yeah, we're on exactly the same mission. We've got a big mission now to get rid of paper and emails by the end of 2026, which is where the market really needs to be to drive this forward. I think everything's aligned at the moment. We now have our own data standards that Accord have provided. So every previous paper interaction you can now do with a data schema or table. So you don't need paper and emails anymore. With the collaborative market platforms as well, that data can be moved fairly quickly. So 4 weeks ago, we went live with Marsh digitally putting data onto the data tables, and then we're extracting them using an Accord gateway digitally. So we now, at the moment, we're receiving over 200 messages a day of digital MRCs and endorsement records. And the minute one of Anthony's team put them on, we get it on our side. There's no emails, there's no paperwork, there's no inboxes. And this is really, we're able to do this now. We're live and ready. And now we're talking to 2 or 3 other brokers as well about doing this. I think what that then does is it gives you the ability to fuel growth, because you can't do things like digital follow unless you've got structured data. It's just a crazy proposition to take bits of paper and try and reconvert them into those processes. So everything we're talking about digital facilities, digital follow, you need that structured data, and that's the model we're really driving towards. And it also removes all of the frictional costs. We've also gone live with Marsh digital accounting, which will line up with our digital MRCs, and it means, in effect, we won't ever have any accounting queries again. So the whole model starts to change. You start to really hack away at the 12.6% as what it was. And we do have a future where we can hopefully get that back down to half where it was and drive it forward.
But both Simon and Anthony observed you need to get away from paper. There's also a role for a digital exchange. I'm going to tee you up here, Mr. Whitespace. What's the role that a Whitespace or a trading exchange performs? And how does it assist in the parties reaching their ambitions?
Yeah, so obviously lots of structured data in contracts and moving it around. Those are the basics, and that's through our APIs. And Marsh and AXA have demonstrated what they can do with that. But we're also looking at to make getting data into those contracts easier. So now we've got our contract library and builder. We recognise that contracts that were entered a year ago may not be very digital. So we're going to release into Sandbox with some broker partners, assisted tagging, which we integrate with an LLM, and we can get it to tell us what tags, structured data we need to inject into the contract. You review that, you push it in. Then you open your world of automations on your previously non-digital contract or low digital contracts. But I thought just to give some real examples of what is out there already, because this is happening. To Greg's point, is just go through those 4 models. So on the augmented underwriting, we've got BPL going headlessly through Whitespace to Allianz Trade to send these high volumes from their case management system through to the carrier to get some appetite, and then they drop into Whitespace in the normal manner once they've got something that got interest. On the scoring and insights area, obviously we've got our own augmented underwriting solution, which Chris can wax lyrical over a beer shortly, and we're looking to do bolt-on services. So, for example, use the domain information from the insured and fire off a request and get a cyber report back. And just have that information for the broker or the underwriter available. And we're looking to introduce more and more of those services. So your trading platform becomes your hub for getting information. Just on the pure algo, we've developed Whitespace Automation, which is Whitespace paired with the rules engine. And basically, we can automate stuff. So we automated declines, automated refers, auto stamp, the auto follow solution. And we gladly, whilst we've got that solution, we will gladly cooperate with the keys, the InsurX's and the View.ai's. Why wouldn't we? Just on the digital broker facilities, we've got Auton, that's powered by Whitespace and Verisk. And then we've also demonstrated a proof of concept with Rethink. So we know we can integrate with these algos, okay? It's been proven. And then just on the portfolio trackers, we've got work to do there, right? We're introducing programs into Whitespace shortly. That will help. They'll help these trackers determine whether they're oversubscribing on different layers, etc., like that. But maybe they could benefit from our appetite matching service to advertise this capacity.
And I've been talking about this for at least 20 years. Can we do all this without some sense of standards? How far is the tech going to be able to support all that? There's a sort of element of collaboration needed to make this happen. Are we any better at this than we were 20 years ago when I was trying to do it?
I think traditionally the answer to that, or the thought process to that, is always about data and consistency. To be slightly controversial, I think that there's an elephant in the room, which is that collaboration piece. I think, we've heard all about data today. We know that it's moving in the right direction. But I think there's definitely a need for the market, from the broker to the carrier to ourselves as a digital trading platform. There's a need to collaborate and create the right economic incentives, the right business models, the right operating models to make markets want to drive that transformation piece. And the second part of, I think, driving that will be very much around historically, we've definitely, as a market, looked to digitize an existing process. And I think rather than what we're seeing potentially in this room today, rather than stepping back and saying, actually, great, what can we do differently? How can we actually change our market now? We've got this new technology. They've looked to digitize, as I say, that old process. So I think that's something that needs to be taken into account. So fundamentally, I think, yes, we are in a different place. We've heard, rumors, of that happening along the way. But I do think there is a realignment on that economic model, from a broker to a carrier to whether it's a lead, follow, whoever it may be, that, we should actually work and collaborate together and try and solve that.
There'll be a lot of people here who have come here for the odd tip. You're a digital leader in a huge organisation. You've had to make a business case for this, and you've had to go to leaders, you've had to get investment. What can you share with us as to how to make a business case to get the investment required to go make this happen in a large organisation or a small organisation?
It's actually been relatively straightforward. I mean, I think as the largest broker in the market, we have a responsibility to help drive the modernisation of the market. And I think that our leadership today has understood that and is, taken the reins and is going to make it happen. From our own perspective, though, there's clearly the advantages around the efficiency. We want to do more for less. I mean, actually, if you look at us over the last 5 years, we've kept the same headcount, and yet our business volumes have pretty much doubled. So that's already a reality. It doesn't mean there's going to be massive redundancies, right? It means doing more for less, which means we need our brokers focused on negotiating lead terms, selling to the network, innovating new products, right? Not doing rekeying or chasing down follow lines, which are relatively low value added. So there's clearly an efficiency play. Ultimately, though, the key strategic benefit for us, and I'm afraid this only applies to us, is the data, okay? Data is our strategic moat. We potentially have more of it than anybody else. And the power of data is proportional to scale, and therefore if we can capture that data at scale, then clearly we have an advantage. And by digitizing the transaction, we can effectively put a net in the middle of the flow and we capture everything. We get comprehensive data about our clients' risks, the solutions that they're buying, and the trading dynamics of who we're interacting with.
I'm going to push you on that because as the biggest broker, and a lot of risk originates with you, you can therefore, in that leadership position, take a lead in getting the whole market better data and telling them what they want and investing in that, not just for your benefit, but for the whole market's benefit, which is a corollary benefit to you. Is that part of the thinking?
I think one of the lessons from the past is this kind of, ambition to try and structure everything. If you think of, Blue Mountain Connect, back to Limnet. I mean, these initiatives try to fully structure the submission, and that's just not going to work. We have a platform actually where we do that, and we spent 5 years, we've got 10 products up, then we put 10 million through it, right? And it's fully structured. But Whitespace would put 15 billion through it this year. And we're going to do that by not trying to fully structure everything, right? We're going for the 80%, or even the 20% that gives 80% of the benefit, right? So Whitespace, we're using pretty much the CDR record, fantastic bit of work done on that, right? It's not everything, but it's enough. It makes a big difference. And then we'll provide a little bit beyond that. If an underwriter wants additional data, and often they want something unique, right? They have a unique question about the SOV, right? What's my exposure in Trinidad? Whatever it happens to be, right? If they want to get that, we'll give them the SOV. They can ingest it and they can invest to make that happen. But we're going to focus on, let's say, the 20% that serves 80% of the needs.
Very helpful. You had to make an investment case, presumably. How did you make that?
Yeah, I think it was all about realignment of the way we work now. So one of the big areas I see, further to Anthony's point about the 35% of follow, is that when you speak to underwriters, they'll tell you at least 25 to 30% of their time is spent on non-underwriting activity. So with these new digital data exchanges and real-time models, processes can change now, and we can remove a lot of that frictional expense in how they do it, and we can get them to focus on what's really important to the market. And I think the other thing is for London is we've got this massive opportunity with everybody interconnected in a very small space. And I think the global market is watching us now to see how we can work together and how we can build this, because we're the one location where this can be done. And I think we've really got to drive that to move forward and just change the way the industry has worked historically.
I'm intrigued to know, looking forward, where you think we'll be in 5 years' time. And what I really want to get to is what will be the biggest difference between the way we trade now and the way we trade in 5 years' time? Chris?
I think in 5 years' time, for me, I think fundamentally it's going to come down to, I'm going to put my underwriting hat on, is the way that underwriters actually will operate. I think with the real-time data that we're talking about, machine learning and AI, buzzcard bingo, I think we're going to find that underwriters are no longer going to be writing and forgetting, effectively. There should be, with Internet of Things, everything like that, it should be dynamic. It should be happening throughout their policy life cycle. So I think the underwriters are going to have to take on a role of almost being kind of a hybrid of a risk engineer, potentially, and a data scientist, and sit there in the middle and actually actively manage their portfolio throughout the year.
Anthony, what would you think was the biggest difference?
Many of you may think I'm a bit of a space cadet for saying this, but I really see this as the big bang of insurance, right? The equities market went through this in the 80s, and they moved from paper tickets to trading screens. Our brokers are going to have a trading screen. They'll have a risk on there. They'll be able to digitally triage the leads, right? There'll be an API made available. Leads can triage the submission based on their algorithms and come back with a prioritization, which our brokers see. They'll be able to see all of the follow capacity, whether it's from our quota shares, what I call the beta, or from the digital follow markets. They'll be able to single-click trade with those markets, right? It's a complete game changer. And what's most exciting is, I think Simon alluded to, right? We are the only marketplace in the world that is doing this. I would argue we have an existential moment where we have to do it, right? But if we can pull this off, then we have a chance for London to be unique in the global insurance market.
I could show you a presentation I made to Lloyd's in 2003 that said that, but I hope you're right.
So do I.
Simon, what would you say?
Okay, so we're starting to do it now, and we are going to do it. I believe we will get there now. So it's a model with a real-time data exchange with transactions moving instantly. I think most big carriers are going to have a bifurcated model, which is probably a lead portfolio that's still got a lot of underwriting input, but really enhanced by AI and other tech capabilities. I think most people then are going to have a digital follow portfolio, which is really algorithmically driven and a lot of tech and IT support, and then also a facilities and binders portfolio. So I think the key message now, though, is that it's available, everything's there. Let's just get on as a market and implement this and really make it happen.
Thank you. And Lee?
Yeah, so I think across the four models, again, I think we're going to be looking at decisions triage based on exposure data as well. So if you're running hot on a particular area, I think on the algo, I'm hoping that non-100% lead algo will be showing its face. Let's hope so. Automated rating, stuff like that. I don't know if this exists as a concept, but I'm going to claim it if it doesn't. Parametric facilities. So what I mean by that is the fact that you can encode like a digital contract of your facility, you can drop it into the platform, and you can warn an automation against it immediately. You can get declines, appetite match, etc., etc. On the active portfolio trackers, I'm going to say that we'll be building more automation, but I think what we really need to do in Whitespace is put that underwriter to underwriter feed. So we've got broker to broker, we've got broker to underwriter, but we need that underwriter to underwriter, and that helps in the delegated authority space. But just one thing, so I had breakfast event, 15 executives the other week, and we got a real sense. One of the underwriters in the room afterwards said, look, we should be thinking about doubling the size of the London market. What that made me realise is we've all got our individual strategies, and we've got market initiatives like Blueprint 2. That's a big, big ambition. What I would say, challenge you, is get together underwriters and brokers and form smaller groups and get an element of a combined strategy. Take a product and sweat it. Get it through the automation journey. And like Greg said, try it out. And we're happy to help you on that journey.
Excellent. Well done. Thank you to my panel.